Yes. What's going on, family? What's going on? What is going on, my family? How are you guys feeling tonight? It is your boy Abel, super excited to be here back with every single one of you beautiful people in the family. Right, go ahead and drop those locations in the chat, family, because we are live right now. And yeah, it's the start of our week here on YouTube, and I'm extremely excited to be able to do these sessions with y'all. Because we got a lot to talk about, right? We have a lot to talk about today. We're going to go over some data. We're going to go over the calendar. And then we're going to get into actually taking a look at the markets and see what the markets has ultimately been doing. And if you guys paid attention to my weekly video on Sunday, my weekly outlook, the market is doing its damn thing, family, right? The market is doing its damn thing. I'm having a really great week already, and the week just started. And it's all because of what I've pretty much told you guys on Sunday during my weekly outlook video. Because everything that I talked about in that video is actually playing out in real time. So we're definitely going to talk about, obviously, what the markets are looking like, how we could position ourselves going into tonight's London session and going into tomorrow's New York session. And yeah, hopefully you guys are able to go ahead and gain some value with today's session. I try to make it a point of mine, guys, that every single session that I host, even though there's a lot of information that is repeated, right? A lot of information is repetitive. I still try to give you guys a little bit of value, even though I do talk about things that are, again, on a daily basis, just because we have to bring it up. It's what influences the market or what's affecting the market, so we have to be very clear on what is going on. So that's why I like repeating myself a lot, guys, when it comes to speaking on certain things. But we're about to turn it up. All right, we're about to turn it up. So let's see who we got in the building with us tonight, family. Again, super excited to be here with you guys all. I see we got the Boot in the house. We got Vermont in the building. What's going on, Kyle? Good to see you. New Mexico in the building. That boy Skaggs, what's good, dog? Good to see you in the chat. All right, let's see who else we got here, family. Go ahead and drop those locations, guys. I see we got OKC in the building. We got Chicago, Charleston, South Carolina, New Jersey, New York in the building, Baltimore, Maryland, the 410. What's going on, Tony? Good to see you in the chat. We got Sin City in the session. What's going on, Anthony? Good to see you, my brother. I appreciate you. We got Oklahoma City out here in the building tonight. Right, what is up? We got Brooklyn, my brother Danny. What's going on, my little bro? I appreciate you for tuning in, my brother. Right, we got Baltimore in the house, Chicago, Orlando, Florida. We got Michigan in the building. Big boy Devin P. What's going on, bro? I appreciate you for rocking with me tonight. We got San Antonio, Texas. We got Queens. That boy Trainer Will in the building. What's going on, my brother? I appreciate you. We got Perth, Australia in the house with us tonight. So super excited to being able to educate every single one of y'all that are rocking with me tonight. And again, my whole objective, guys, with these streams, it's just to provide a little bit of value. All right, just provide one piece of nugget, one gem that can at least put something into perspective for you that can ultimately help you out overall throughout your trading journey. Because trading itself, guys, it is one of the most complicated skills that you can truly learn, right? Being a day trader, a full-time, not just a day trader, but just being a full-time trader in general, guys, is probably one of the most difficult things to actually do. Okay, they say what, maybe 5 to 10% of people that actually try to do this actually succeed. Okay, but if we're also being realistic here, let's actually look up some stats, right? So again, we know that traders, for the most part, family, right, maybe only 5 to 10% of traders truly actually succeed in this field, right? But if we actually compare trading to, let's say, professional sports, okay, which I know we all love professional sports, right? A lot of us growing up, we've always aspired to be professional athletes, and a lot of us probably actually tried, to become a professional athlete, right? And our parents always supported us, when it comes to sports, right? And they always try to help us get to the next level, not realizing that becoming a professional athlete, low key, is probably harder than actually becoming a professional trader, right? So let's see. Actually, check out some stats real quick. Now, again, I'm literally doing this off the top of my head, guys, so just bear with me real quick, right? But let's see how many basketball. Let's see how many college. Let's just use college students, right? How many college students go pro playing basketball, right? Now, obviously, I don't know if they're gonna give me an exact stat, but let's see. In a study by the NCAA in April 2020, of the 554,000 male high school basketball athletes, 18,000 moved on to play in college, or 3.5%. That number shrinks to 1% when you specify to Division I schools. Making it to the pros is more of a challenge, as of those 18,816, only 1.2% make the jump from the NCAA to the NBA. All right, so really understand this, guys, right? And we're just really putting things into perspective real quick, right? Because we always get this, a lot of traders and investors saying that this is one of the hardest things to do, and it really is, right? Realistically, trading is it is very, very hard to do. And it's very hard to become profitable. But there's also a lot more things out there that are way harder to actually become a professional in, and that's why I wanted to bring it up. I'll pretty much start this conversation today with this, right? So again, let me say this one more time, guys, right? In a study by the NCAA in April 2020, all right, there was literally 500,000 male high school basketball athletes, okay? 18,000 of that 500,000 went to play in college, so 3.5%, right? Really understand this, guys, right? 3.5% of all high school athletes, well, of all high school basketball athletes, are the ones that actually make it to college. Is 3.5% less than 10%, which is what we got here in trading? Or 5 to 10%? Yes, it is. Right? So even getting a scholarship or going to college, not even the pros, but just to get to college, guys, right, and play on an actual collegiate basketball team, there's only 3.5% of students that ever get that chance of doing it. So again, sports also one of the hardest things to actually become a professional in. So when you do start to compare yourself, as when you're going throughout this trading journey, or when anybody else, right, if a friend or somebody comes up and be like, yo bro, you still doing that trading thing, right, and they start to downplay it because maybe the results ain't there just yet, just let them know, like, yo, they're gonna come, but put things in perspective, right? Put things in perspective, right? Again, trading is hard, but there's also a lot of things that are much harder out there that for people is actually normal, right, for us to actually go ahead and pursue. So it's just, again, just keeping things in perspective, guys, definitely can help you guys out tremendously, especially throughout this journey. But just remember this. It is harder, right? It is actually harder to become a professional athlete than it is to become a professional trader. Okay? We just have to really lock in, trust the process, and follow the rules. Right? When you lock in, you trust the process, and you follow the rules, you have a very, very, very high chance of becoming a professional trader. Right, big shout out to Cicely in the chat. What's going on? Welcome to the Wealthy Fam. I appreciate you for supporting and being a sponsor of the channel. It definitely means a lot to me. And because you also became a member of the chat, you can go ahead and message me on Instagram as soon as you can, and I can get you added into a private community, right? Our private Telegram chat, where it's absolutely going crazy. And that's just a way for you to get direct access to me and just pretty much be in the conversations that we have on a daily basis in that private chat. Right, so I definitely appreciate you. Welcome to the family, Cicely. Thank you for supporting and sponsoring the channel. All right, so guys, I'm going to say this one more time. All right, yes, trading is hard. but you have a much likelier chance of becoming a professional trader than becoming a professional athlete. Just keep that in mind. Put that in perspective. Okay, it is hard, but it's not impossible, and it's something that you can absolutely go ahead and do. All right, now let's go ahead and get into the markets, guys. So for today's news, we didn't have nothing too crazy today. A bunch of 2-star folders. We had whatever the heck this is, EIA short-term energy outlook, right? That was a 3-star folder, high impact news that came out at 12. But overall, there wasn't really nothing today, guys, on the calendar that week that would have maybe caused the markets to go crazy. Now going into tomorrow, though, right? Tomorrow is going to be crazy. All right, tomorrow is where it's going to get interesting, guys, right? And it's because of CPI data, right? We have CPI getting released, core CPI and CPI data getting released tomorrow, guys, at 8:30 a.m. Eastern Standard Time. And that is going to be a big deal, all right? Because CPI, guys, measures the change in the price of goods and services, aka it also helps track inflation. Okay, inflation, guys, has been the number one thing that the Federal Reserve has been trying to combat for the past few months. Okay, so this is definitely going to be a release that everybody that's serious about trading or investing or big institutions, everybody's going to be paying attention, guys, including everybody in the government. Like, this is a big deal, right? CPI is probably one of the most important news releases always, but now even more important now because of what we're dealing with inflation, right? So it's definitely probably one of the most important news releases that are actually being paid attention to on a daily, on a bi-monthly or whatever the heck, whenever these CPI data consistently come out, right? But overall, it is definitely something we have to be aware of. We got to pay attention to it, guys. And that's really what's going to cause the markets probably to not have as much volatility in the markets going into tonight. But tomorrow morning, there's going to be a ton of volatility in the market for sure, okay? So that's definitely something we have to keep our eye on. Let me see what else we got here. I wonder what the percentage of becoming a profitable artist rapper. Bet it's even less. I bet it is too, Payton. Like I really do. I bet it is too, right? I'm actually very interested, right? This is probably gonna be a stat that's a little bit harder to actually find. So I'm actually I'll do that on my own. But yeah, it is probably most likely way harder to become a professional trader as opposed to like a professional artist. 100%. I really believe that as well. Right, but let's see. Your vision is blurry. If your vision is blurry, you're gonna have to go to your settings on the video and change it to 1080p. Okay. All right. So let's go ahead and take a quick look, guys, at the CPI data and see what actually we've been dealing with over the past, again, last readings, and then see what the expectation is going into tomorrow. Okay. So core CPI, it actually came out at 5.9% last reading, right? Is forecasted to actually increase to 6.1% coming out tomorrow, which is going to be pretty interesting. Now, core CPI is important, guys, but you also have to keep in mind, guys, that core CPI does not include. It does not include. What is it? Gas and energy. It does not include food and energy in these numbers. All right, core CPI does not include food and energy in these actual inflationary numbers. Okay, now this is a big deal, right? Because food and energy is probably what most people are spending most of their money on. Okay, so yeah, core CPI is definitely important because again, it measures the change in goods and services, excluding food and energy, right? Give you an insight how that is. But the main one is probably going to be the regular CPI because this includes food and energy. And since food and energy, guys, is what we spend the most money on to live, it's definitely very important to be aware of this number. Okay, so right now, inflation came out at 9.1% last reading, which is 40-year highs. It's actually expected right now to decrease to 8.7%. Okay, so they're actually expecting inflation to start to turn around. Now, there's going to be a few ways, guys, that you guys can look at this specific release, okay? Because this is probably, like I said, going to be the one that most people are going to be paying attention to, is that CPI reading. And there's going to be a few ways to do it. So, how I'm going to be interpreting it, remember, you have to remember, guys, the main objective of the Federal Reserve. The main objective of the Federal Reserve is to try to fight inflation. So, their objective and what they're doing right now, everything that they've been doing, right, with raising interest rates, reducing the balance sheet, tightening up the monetary supply. All these things are done so that they can start to see these numbers start to go lower. Okay, if we take a look, guys, as well, let's actually go ahead and bring this up real quick, right? Let's actually take a look at what the market has ultimately been doing. Okay, let's actually bring up core CPI as well. I actually want you guys to take a look at core CPI as well, right? Let's take a look at core CPI first, and then we'll take a look at regular CPI. Now, again, keep in mind, guys, core CPI excludes food and energy, which is the two biggest components that we spend money on. We have to spend money on food to survive. We have to spend money on energy, gas, electric, all that good stuff, right? But this excludes that, so keep that in mind. Now, if we look at core CPI, which excludes our two as big expenses, we can see that core CPI actually plateaued back in April, right? The 4th month of this year. So back in April, guys, for CPI, inflation peaked at 6.5%. And then ever since then, it started going backwards, right? So if you're looking at just core CPI, you can make the case to say that, okay, inflation is finally under control. But you also have to look at this with a grain of salt if you're trying to make decisions off it, because, again, it does not include food and energy, which is the two biggest things that's driving inflation right now. Okay, so if you're going by core CPI, this thing has already found its peak, and it's already going to the downside. But if we look at regular CPI, this thing has only continued to increase and increase and increase. Okay, two charts, guys, that typically, normally, not always, but normally they are very, very similar, right? But as you can see, core CPI has already found its peak and started going backwards, whereas regular CPI is still going up. Now, again, this one is probably going to be the one that makes the most sense, guys, if you are trying to decide on which one to use. Again, you want to make sure that you're using regular CPI, because, again, it does include food and energy. That is a very big deal. But overall, we are seeing continuations higher. Now, again, what do I expect tomorrow, guys, or what is my opinion on the actual release for tomorrow? I'm expecting this to actually do turn around. Like, I wouldn't be surprised, guys, if we actually do see, a number lower than 9.1%, right? I don't think we're going to come out at 9% or above, especially with the way that they've been tightening up, right? Again, them raising interest rates, guys, could have or should have some effect on this number. But we also have to keep in mind as well, and this is exactly why, guys, in my opinion, the Fed still has a lot to do, right? Because, yeah, we're seeing CPI up at 9.1%. Tomorrow, hopefully, it comes out a little bit lower, okay? But due to the release that we had last week, okay, we had NFP last week, non-farm payroll. And the non-farm payroll absolutely destroyed expectations, right? They were expecting 250,000 new jobs added. I believe there was over 500,000 jobs added. Now, typically, in normal market conditions, which we're not in today, but in normal market conditions, when we have such a beat in numbers when it comes to job, that's normally going to send the stock market flying, right? That's going to bring a lot of optimism into space. Traders are going to be more risk on because they see what they're seeing. But we have to be aware of these things as well. Okay? We have to be aware of these things as well. But overall, guys, right, let's go ahead and get into it again. Like I said, this is pretty much what we got to pay attention to tomorrow, CPI. If somebody could wake me up tomorrow morning, or not even just wake me up tomorrow morning, right? I'm just not going to stay up late tonight. I was supposed to go live with you on the actual news release last week, but I was just up way too late till about 4 in the morning, and I just did not wake up enough. But tomorrow, I do plan on waking up with y'all, right? Early morning, 8:30. If anybody's on this call right now and has my personal number, and if you don't see me up at 8:30, just go ahead and blow up my phone, all right? Because I want to make sure that I trade this news release live with you guys tomorrow morning. Okay, so live tomorrow morning, you guys got my word. I will be live. And I want to be able to see what this number comes out as, and see if there's anything that we could pretty much take advantage of. I'm expecting a drop in CPI, which could bring short-term momentum, short-term strength. Right? So very simple, guys. Okay, as of right now, inflation's at 9.1%. Right? If we come out less than 9.1% inflation, right, less than one, we will be risk on. Right, higher than 9.1%, we are going to be heavy risk off. Okay, so all my sentiment traders out there, all y'all that understand sentiment, which is what everybody should need to know. If you really want to trade smart money, right, and I gotta bring this up, right? But if you really want to trade smart money, you have to learn sentiment. Right? If you really want to trade smart money, you have to understand sentiment. Okay? You have to understand sentiment. Guys, that is such a nugget. When you understand sentiment, then you understand what smart money is really going to do. Okay? But just an easy way to look at this, right? Just to keep things as simple as possible without trying to lose anybody. Current inflationary numbers at 9.1%. We come out less than 9.1. We could experience short term. Let me actually redefine this, right? Short term risk on sentiment. Okay, because I'm still very much extremely risk off. Even no matter what the only way that I will change my bias, guys, from risk off to risk on is if we get like a massive miss, right? And inflation or CPI just comes out, crazy lower, like something crazy like 7%, 6%, right? That shows a big drop. Once I see something like that, then I'm changing my sentiment, which is going to change my bias. All right, so overall, anything less than 9.1% though is going to bring short-term momentum. So we should see short-term risk on assets benefit from that. But if we just come out way higher than 9%, guys, then yeah, the dollar is going to fly. Indices are going to absolutely go to hell. Cryptos are going to go to hell. Right? Stocks are going to go to hell. All that good stuff. Okay, so just something to keep in mind as well, guys, when we are approaching tomorrow. That's how I'm going to be pretty much, taking advantage of CPI release, right? Now, let me see what else we got here. Should we exit our trades that are in profit because of the major news tomorrow? It doesn't hurt to always secure profits, especially if you are not aware of what the next release will do. If you don't have no type of insight because of sentiment, whatever the case may be, it might make sense just to get out, right? Not even, risk any type of open positions that you have. Let's see. Quick questions. Why does NAS 100 go down when CPI numbers come out good? Right? That's a good question. All right, really good question, Escobar. Right? Because again, when we understand, guys, especially we have to understand there's different market conditions from right now than we were just in literally last year. Right? Last year's market conditions 2 years ago were completely different. Right? Where if we seen strong CPI numbers, typically that's going to cause NAS 100, right, to actually go ahead and possibly increase in value. Right now, when I say strong CPI numbers, guys, you have to understand, right, quote unquote strong CPI data for the Fed, their goal is to keep inflation at around 2%. Right? So if we see inflation at 2% and combining that with low unemployment, combining that with stable prices because it's at 2%, that causes the stock market to increase in value. Right? That is a scenario for risk on assets. Right? Low unemployment, low inflation, right? Strong GDP, growing GDP. That's going to cause risk on assets to absolutely fly, go through the moon. That's what we were experiencing over the past 2 years right after the whole COVID situation. We were experiencing low unemployment. We were experiencing GDP increasing every single year, every year. Right? We were experiencing low inflation at a certain point. And that's why asset prices went through the roof, because those market conditions called for it. But now we're clearly in different market conditions than we were 2 years ago. Right now, inflation is through the roof, where we need to get it under control. Right? We're now starting to see negative GDP. Right? We had it for 2 quarters in a row, quote unquote, a recession. right? So trading the markets today, trading the data from the markets today, is going to give you a different interpretation of how you traded on the charts compared to how you did it last year. Current market conditions, guys, absolutely make a very, 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 very important aspect of what you're looking for in terms of sentiment. Right now, because of the state of everything, high inflation, negative GDP numbers, we still have strong unemployment, right? In fact, the unemployment rate, I believe, went to 3.5%, right? So we still have very strong unemployment, but for the most part, we're still dealing with high inflation and we're dealing with negative growth. That, in my opinion, that's going to continue to attract more risk off type of plays, right? More so safe haven type of assets. Now, if we have inflation going through the roof, negative GDP, and bad unemployment numbers, high unemployment, see, then that's a recipe for disaster, all right? That's a recipe for a prolonged recession that is going to hurt a lot of people, okay? So that's a good question, though, right? So overall, though, just to make things simple, typically, if CPI numbers come out at 2%, right, typically that's looked at as good for the economy, right? That's good data coming out. Anything way too higher, then people start getting fearful, right? Anything way too lower, then you could think about it a different way, right? But that's just something to keep in mind. Let's see, can you look at US30 if possible? Maybe give thoughts. Yeah, for sure. I'll take a look at all those assets, guys, in a second. Just give me a minute, and I'll get to those assets for sure. Let's see. Fed measures core more. So sign up for your course for next week, but haven't got any info. Gordy, make sure to go ahead and send me a message. Right, I have been sending out a confirmation email. Right, to anybody that's a part of the boot camp, you should have actually received a confirmation email. If you not, check the spam or junk folder, whatever the case may be, see if it went in there. And if you haven't received it just yet, just send me a message on Instagram, and we could chop it up, and I'll make sure that you are confirmed for the boot camp for sure. I see. I think they haven't reduced the balance sheet, hence why the markets have been going. I mean, they have been reducing the balance sheets, right? Like we can actually literally see this, right? Fed balance sheet, like you can literally see them actually doing it, right? We can literally see the actual, the peak of this actually literally turning around. So we could really start to see. This should start. I mean, we can see it. Look at this, right? So they are clearly reducing their balance sheet already. And the way that they're reducing their balance sheet, guys, is just by not actually taking on more debt, right? Because typically, guys, when the Federal Reserve, right, when they actually go ahead and they have, all this debt that they're trying to give out to other people, to businesses, to companies, to corporations, to countries, whatever the case may be, right? Once that debt matures, typically they'll go ahead and buy it back and then repeat that process. But right now, because we're going through the process of quantitative tightening, and they're actually reducing their balance sheets by billions and billions and billions of dollars a month, right? They're not actually purchasing nothing after those government bonds actually mature now. All they're doing is they're letting those government bonds mature, and they're pretty much just letting it run off the actual balance sheet as a whole. But they are, they have been since April 13th. We have actually started to see the balance sheet finally start to decline. And that is, again, something that's supposed to help fight inflation, right? Where they're not continuously pouring more and more money into the Fed, which is in return is going to go straight out into the economy. They finally started to actually reduce it, and now we're starting to see that thing plateau, right? But that's just, again, it is happening. It's happening. It seems like it's happening slowly, but it is happening. Let's see. Rent prices now, though, are fair. Rent prices, actually, I've seen that rent prices were at the highest point in a while. But yeah, guys, as this whole cycle starts to go, right, and as like everything, the price of goods and services start to finally come back down, so will rent, right? Because eventually, if renters just cannot afford rent because the rent is just through the roof, then yeah, a lot of these landlords are going to have to lower their rents, and that's what I think is eventually going to happen. We are going to have widespread, number of rents finally start to turn around and become a little bit healthier for the average individual. Because right now, renting is extremely, extremely expensive. Like, you're literally paying probably double of what you would be if you just took out a mortgage on the house that you're renting. So, but yeah, it's interesting. Let's see. It is a true tax is increase. Is it true taxes increase? I'm not sure. Let's see what else we got here. We have 8.7 priced in, not 8.9. I'd imagine. Yep, you're 100% right, conscious. That is true. Let's see, brother O in the building. What's going on, my brother? I appreciate you. Shout out to you for rocking with us. NAS 100 interest and level, risk on, bullish, risk off, bearish. That's a great question, Donnie. So for NAS 100, risk on is bullish, risk off is bearish. You're 100% correct. Right, 100% correct. Risk off, dollar strengthens and stocks crypto weaken. Risk on is the opposite. There we go, Mike. There we go. Exactly. All right, let's see. They only reduced the balance sheet by 1 billion. Yeah, that's what it said. And the crazy thing is, like, their plans was to reduce the balance sheet by like I think it was like 80-90 billion dollars a month, right? Like it was something crazy, right, that they were actually going to start reducing it by. But yeah, clearly they just haven't really started it completely implementing the whole thing, right? Let's see. Hi, how much is the boot camp? So the boot camp is $289, right? It is $289 to be a part of the boot camp, guys. And just to show you guys a little bit of what you are going to get if you actually participate in the boot camp, is very simple. You're going to get 5 days with me, and each day, guys, is going to be extremely valuable. All right, so let me go ahead and show you guys just a quick outlook, and then I'm going to get into, I know you guys all want to just see the markups and see the charts. I get it. I know. Trust me, I know. All right, but we have to go through things first before we can get there, guys. But overall, right, this is pretty much what the boot camp is going to be made up of. It's going to include 5 days of straight value, straight sauce from me. Day number 1 is all about mindset and habits. Day number 2 is about risk management, money management, and trade management. Day number 3 is about fundamental and sentimental analysis, which is a fan favorite. Day number 3 was probably a big eye opener for everybody that was in my last boot camp. Every single day was an eye opener, if we're being honest. But day number 3 was absolutely next level. Just because, again, most people don't really focus too much on fundamental and sentimental analysis, and that's probably the reason why you're not profitable today. Is you're really trying to become a profitable trader while only understanding technical. It is extremely hard, guys, to trade full-time profitably with only understanding technical analysis. Okay? Make it easier for you. Understand fundamental, sentimental, and it will change the game for you. That's why day number 3 was a banger. Day number 4 is the technical analysis day, and then day number 5 is putting it all together. All right, so that's pretty much what we're looking at for the boot camp. Absolutely next level boot camp. By far the best boot camp that any one of you guys will ever participate in. I don't care about any boot camps you've been on in the past. I don't care who the teacher was of it. I just know for a fact they're not providing more value than I am, and I will on this boot camp, guaranteed. Guaranteed. All right, so definitely go ahead and participate, guys, if you are interested in that. Okay. Let's see. Them people who work at leasing office don't even make 3 times the rent. Yeah, that's funny, Robert, because that's a fact. They really don't. They really don't, right? They really don't. All right, so let's go ahead and see what we got here now, guys, and go down our list of currencies to see what we pretty much got going on. All right, so now looking at the dollar index, guys, overall, similar concept. We have been extremely bullish. I'm gonna go over this stuff really quickly, guys. I'm not gonna take too much time on this because I go over it, like I said, every single stream, every single session. So if you've been on my streams long enough, then you already know pretty much what the deal is with this. But overall, I'm still extremely bullish, guys, the dollar. Again, keep in mind, if sentiment does not change, finish the question. All right, finish the question, right? If the sentiment does not change, let me go ahead and get back in the chat. I was just telling a fellow trader how I am finally breaking bad habits when it comes to trading. Let's go, brother. That's what I love to see. Let's see. My stress levels about learning have dropped so much because of this group and this value. Let's go, 20 pip. Let's go. Right, so, guys, the question that I just said, right, is if the sentiment does not change, then we stay with the trend. All right, we stay with the path of least resistance. There we go. We stay with the continuation. Exactly, right? If the sentiment of the financial markets does not change, stick with the trend. Right? And again, guys, when we're talking about sentiment, and again, when I'm talking about with risk on and risk off sentiment, this applies to every financial market, by the way, right? Every single one, not just Forex, not just the foreign exchange market, but this correlates with every single market. which is why I say this all the time. If the sentiment does not change, we stick with the trend. Okay, so risk on, right? We focus on riskier plays like stocks, crypto, various commodities. I can't even spell commodities. All right, so on and so forth, right? These are just a few, and then we have like the Australian dollar, New Zealand dollar, things like that as well, which are considered risky, right? Risk off, we buy the dollar, right? US bonds, and I'm just going to use these two for now because these are like the only things right now that are pretty much gaining value during these risk off markets, right? Because even typically gold would normally fall in this, typically the Japanese yen and the Swiss franc, but they're not acting risk offish, right? You know, they're actually behind the curve in my opinion. So overall, guys, this is pretty much what I mean by sentiment, right? What is sentiment of the financial markets? Are we risk on, where we can see an increase in riskier plays like stocks, cryptos, or commodities? Or are we risk off, where we actually see the dollar be more in demand than anything else? Okay, so as we see right here, guys, based off what we're looking at for the US dollar, are we considered in risk off or risk on sentiment right now? Are we considered risk on or risk off? Let me know. Are we risk on or risk off? Let me know. Let's see. No change in sentiment. No change in bias. There we go. Hello, sir. I am new here. I am Pakistani. What's going on? How are you doing? Shout out to you. Welcome to the family. Please, about Euro and GBP. Yeah, we're definitely going to take a look at those for sure. Right, so let's see. We got about 8 answers out of 160. Let's go. I love the participation, family. You like my sarcasm, right? Right, but yeah, guys, overall, anytime we're seeing the dollar be the most dominant currency, or we see it actually trending in one direction, or in specifically this direction, we see it trending to the upside, we are risk off, right? This means that we are risk off. Also, when we see the dollar, guys, the US dollar, when we do see it trending to the upside like this also means that there's a lot of shit happening in the world right now. Right? There's this, you know, the dollar increasing in this much value and this much momentum. When we see a strong trend like this in the dollar, this also tells us that there's a lot of shit happening. There's a lot of chaos. There's a lot of uncertainty. There's got to be something in this world right now that is happening that is causing everybody to flock to the US dollar. Because, guys, the dollar only really gets massively strong during periods of chaos and uncertainty and doubt. Okay? So we have to be aware of that. But like I said, I still believe we are very much risk off. Sentiment has not changed. Okay, we're still dealing with everything, and that's how I'm going to stick with it. Now again, anything, remember what I said, depending on tomorrow's release, anything less than 9.1, all right, can bring short-term risk on momentum, right? So if we see numbers come out lower than 9.1, probably closer to like 8.7, 8.6, then we should see the stocks rebound. We should see crypto rebound. We should see commodities rebound, and we should see the dollar potentially selling off some more. Okay, so that's just something to keep in mind, guys. Now again, I don't think it's going to come out nothing crazy. I think it's going to come out low, but I think it's going to be like a short miss, right? I think it's going to come out maybe at around 8.8, 8.9. Who knows, right? But I know what I'm going to be looking for and how I'm going to be playing the sentiment off of that release, right? So I'm still very much bullish. I still want to see more continuations, very much so, until proven otherwise. Okay, so that's pretty much what I'm looking for going into tonight, guys. I really just want to see more continuations higher. If we look at this from a smaller perspective to really try to figure out where the momentum could possibly come back in at, well, let's take a look at structure on the smaller time frame. Right now we're on the 1 hour time frame. Right, we've seen the market find this low down here, and then we've seen a very strong, pretty nice reaction here for the dollar. Right, and then we've seen the market ultimately after this strong push up right? Come back down, create another high, and now we're just in the middle of this little like correction that we're in right now, right? But there's a few levels that I'm going to be looking at, guys, to see where we can find dollar strength to come back in. The first area is going to be right here. Probably going to be this is super close. Like, this is something that we can see if it's going to hold or not. Probably right at London session, right? So if we can hold this 106.16 level, then that's where I would love to see the market go ahead and rebound and go back higher, right off of this right here, right off of this 106.15 level, right? If we can go down to there, I'm expecting a rebound off of there, and then go ahead and see us, go ahead and continue in this bullish trend overall. That's one level I'm gonna be keeping my eyes on. Another one that I'm also very, very interested in, just because of what's, what it's showing me, is we also have this major level down here as well. Major area of demand all the way down here at these levels. That can also potentially be an area that price does react from. So again, really put into perspective, guys, the scenarios here, right? Tomorrow, CPI data, right? CPI comes out 9% and above, okay? This could be very well the level that we actually start to fly from. Very well the level, okay? CPI, again, think about the scenarios, guys. This is what we have to do as Forex traders. We have to think about every scenario, all right? Think, again, tomorrow, data comes out, 9%. That's going to probably bring strength to the dollar. So if anything, if by the morning we're closer near to this level, we can look for continuations if that data were to come out crazy high. If data comes out lower, right, let's say hypothetically speaking 8.6%, right, then if that were the case, then we could possibly see, the dollar go ahead and experience short-term weakness back down into this level. Either way, no matter what it comes out as, all right, I'm still going to be expecting this thing to eventually rebound. The only way I'm not is if, again, we actually see a major miss in CPI data, right? Like I said, if anything like in the 8%, or not in the 8s, but anything like the 7%, maybe low 8%, that can really cause the dollar to just go to hell, right? Let's see, a low 8% reading, like 8.1, 8.2, 8.3, then yeah, we're probably going to experience a lot more weakness for the dollar overall, right? So just play the scenarios, guys, right? It's very important to understand the scenarios that we're playing with, especially when you're dealing with news and sentiment, things like that. Understand the scenarios that are at hand, and then just prepare yourselves for whatever one actually shows itself when it actually is time to trade. But overall, two levels that I'm interested in, right here and then down here at this level. All right, so let's go take a look at the markets, guys, and see what else we got here, right? So EURUSD, right? So I actually am in a trade right now for EURUSD, right? I actually ended up taking a sell position, a short position right up here. Right now we're nothing too crazy, maybe up 20 pips, 15 pips or so. Yeah, it's around 20 pips. I'm in profit right here. And again, just very simple play, guys. I mean, it's literally what I've been talking to you guys about since last week. I wanted to see a continuation lower for the euro. Overall bias is clearly bearish. We know that. Ever since then, we've just been seeing the market create, this levels of structure like this, right, where we've seen a pullback, choppiness. We broke structure. We came back up, broke structure to the highs. Then we came right back in. And now it looks like we're just creating a head and shoulders type of pattern. And to see a continuation lower. All right, so that's pretty much how I'm still going to be playing it. I am at break even on this position. Right here. So I'm risk free on this, so I really don't care what happens now. But again, going into tomorrow, things can drastically change. Why? Because depending on how the data comes out, it can either send us much lower, or it could send us into somewhat of a deeper pullback a little bit higher. Right? As of right now, I'm still ultimately bearish EURUSD, which is why I'm in a sell. And yeah, I'm gonna see what the market ultimately does give us, ultimately by the morning time. Right? But guys, for me, I still like the continuations lower here for EURUSD. So if we can see maybe a pullback, I would say back up to maybe around these levels, maybe the 1.023 level, then yeah, maybe we might be able to catch an entry to go ahead and continue riding this thing lower. From a technical perspective, that's what how I would approach EURUSD going into tomorrow's news release. Right? Overall, I'm still bearish. I am stops at break even, so I can't lose either way. So it would be I'm straight regardless. Let me see. Yeah, so that's how I'm gonna play it. Again, you know, maybe I'm not gonna be looking for no re-entries today, right? Just being honest with y'all, I'm not looking for no re-entries. I'm just giving you guys maybe a perspective as to where you could possibly re-entry. But overall, I'm just gonna ride this one out and see ultimately what happens with this. Like I said, I'm already break even, so I can't lose. But I do expect more continuations lower, right? That is my bias. That's what I would love to see, more bearishness. So you know, we're gonna ride that out, and we're just gonna deal with the consequences afterwards. But I do like it. I do like the continuations lower here, guys, for Euro USD. All right, let's see. Let's see. My guy. Well, yep. Which moving average are you using on the chart? Right, that is a 50-period EMA. Right, 50-period EMA. Let's see. If you think CPI will come out higher, hit the like button. If you think CPI will come out lower, hit that like button. I love that, Kyle. Yeah, if you guys think CPI is actually going to just change the number tomorrow, go ahead and smash the like button. All right, definitely appreciate y'all for sure. Let's see. How to know when data come out and gives us 8% to prepare. I mean, the data is going to release at 8:30 a.m. Again, I do not expect the 8%. It's going to be somewhere either close to where we just were, right? Low 9% or maybe high 8%. If it comes out to like low 8%, then that's a whole different story that we have to prepare ourselves for. But I'm expecting either still high 9 or low 9%, high 8% to come out for CPI. Let's see. GPS should move in the same direction as Euro USD. Correct. Yeah, for the most part, that is true, Yusuf, and it's just because of the dominance or, you know, though their strength against the actual dollar itself. All right, but let's actually go take a look at GU, because again, GU is doing exactly what we've been talking about, family. Right? If you guys remember last week, I literally gave you guys these setups. Like these are boxes, guys, that I pretty much created last week. I didn't even really touch these. Right? These are from last week's session. And I know for a fact last week when we were on the session, I told you guys if price was to come into this zone up here, right, area of supply, to look for sells. Right? The market literally went right up into that level. And guess what the market did? It actually sold. Right? So again, if you guys were following GU from last week, you guys should have entries up here in this supply zone. And if you do have entries, you're up around maybe 40 pips or so, 40, 50 pips. And that's not a bad day. Okay, so overall, it looks really good. But what can we expect next now for GU? Where I want to see the market come back higher and then go ahead and sell off. Right? Very simple, guys. Like I really do like this potential opportunity here. Right? It's going to be something like this. Okay. If we can see the market come back up to around maybe this is 1.21 level. All right, yeah, around that 1.2105. Right, if we can get up into there, I really like the opportunity for us to go ahead and continue in this bearish tone that we're currently experiencing right now. Because if you look at GBP USD from the bigger picture, do not let the lower picture confuse you. Right, do not let the lower time frame, like these lower time frames, like if you look at it from this perspective, it low key might look like a little bullish, right? So do not let the smaller time frames confuse you. What is the overall bias here? Clearly bearish. Right? Clearly bearish, right? Stick with the path of least resistance. Stick with the path of least resistance, right? That is to the downside. So all we got to do is just align ourselves with that. Okay? We don't want to just jump in randomly, especially after a move. No. We have to wait for a pullback and then go ahead and ride the wave. Wait for the pullback and then ride the move, guys. So again, yeah, I like the 1.21 level, right? If we can get an entry around 1.21, that will be very, very juicy, very, very attractive setup. And then we can go ahead and target back down to these lows. But realistically, there is probably a chance for us to really go ahead and just continue riding this, depending on how the data comes out. But overall, guys, not a bad setup, right? Not a bad setup. It definitely looks nice and juicy for sure. So we'll see what the market ends up giving us at the end of the day, right? All we could do is find the good setups, take them, and then just deal with the consequences. Let's see what else we got here. Devil's advocate questions. What do you mean by trade being risk-free? Yeah, so when we're talking about risk-free trades, we're talking about being in a position, an open trade, an open position, but you are in profit enough that allowed you to actually roll your stop loss in front of your actual entry. Right? So when you actually move your stop loss and you roll it in front of your entry, And if the trade came back towards your entry, you're now going to be stopped out at break even, and you're not going to lose anything. As opposed to if your stop loss was in the same spot and the trade went against you, you'll go ahead and take that loss and whatever the case, right? So that's what we mean by going risk free. Rolling your stop losses to in front of your entry, maybe 1 pip in front of your entry, just so in case the market does turn around, you don't take a loss on that trade. Let's see, bro, you are killing it. Appreciate the game. Appreciate you just saved deals. Definitely means a lot to me for sure. Let's see, would Argentina buying 14 billion worth of our debt make an observable difference? I mean, it could, right? It could, but you have to understand, like, how much of our debt we have. Like, how much debt do we have, right? U.S. debt. All right, let's see, U.S. national debt clock. Okay, so the U.S. national debt is at $30 trillion. All right, so yeah, $14 billion from a retrospect perspective is a lot of freaking money. But is $14 billion a lot of money comparing it to 30 trillion in debt that we have? Not really, right? Not really at all. Okay, so yeah, it definitely could make a sense, and it could just be, you know, Argentina more so trying to protect some of their assets as well. You know, because again, a lot of foreign countries, guys, a lot of foreign investors, you know, they do go to other countries like the U.S. to go ahead and start buying their debt, right? Because it's a safer play, right? It's safe. That's considered a safe haven type of play. When countries or corporations go ahead and start buying U.S. debt, right? Government bonds, U.S. bonds, government treasuries, and all that stuff, all that debt that the government sells off. Yeah, that's just to protect themselves, right? That is literally exactly telling you that we are very much risk off when that happens. Okay. So overall, though, guys, GBP USD looks juicy. I'm telling you, looks juicy. All right, so I'm actually gonna keep this one on my radar as well, and we'll see how that actually ends up playing out. All right, so let's see what else we got here. Do you use a trailing stop, a trailing loss? I do use a trailing loss, a trailing stop loss for sure. All right, I definitely do. I highly recommend everybody to do it. Trail your stop, especially if you are a swing trader, right, or a day trader. Then yeah, get in the habit of trailing your stops when it actually makes sense for you to do so. I highly recommend it. Let's see. It's true about my small time flame confusions. Yep, that happens. Can you take a look at UJ? Yeah, for sure. All right, so this is GU. Just an update. EU, I'm still in shorts. I'm still in sells, looking for continuations. GU, this is definitely setting up for a potential opportunity to look for a sell, depending on how we play off of that 1.21 to going into tonight. Let's go take a look at UJ. Okay, so UJ is also very interesting, guys. Another one that I'm very, very, very much excited for. I'm expecting this thing to absolutely fly. Like, I mean, look at the price action that we're just seeing too, guys, right? Like, this price action in itself is just so beautiful. It's just so beautiful. Right? Like, this thing is just gorgeous, right? Now, what do I mean? Wait, but what do you mean? Well, let's take a look at this, right? We've seen the market create this higher low, higher high, higher low, and then we created this higher low level structure, right? Which at this point was just a major level of structure. Then we see the market ultimately come up, create higher high, and then we came all the way back down, guys, to retest this previous level of structure. And when we did come back down to retest this area of structure, look at the reaction that we actually got. We got a pretty decent reaction out of that level. Okay? Reaction sent us bullish. And the reason why I really like this one is because we're getting the reaction after we spiked below an area of potential liquidity. Okay? What do you mean by that, Abel? Well, let's go ahead and let's use the replay tool real quick. Right at this point, this level of support, okay, a lot of traders are probably going to be anticipating that level as an area of support, and that could be an area where a lot of traders do start to look for entries to go long off. Okay, so because we have to anticipate this level, guys, being as an area of support and that a lot of traders can see, we also have to anticipate that there's probably going to be a lot of built up liquidity below this level, right? So if we did want to see the market actually go ahead and really increase going to the upside, all right, I'm going lower time so you guys can really see it, right? Then typically you could either see a strong reaction out of the demand zone or a spike into liquidity below the demand zone, and then a rebound to continue. And that's pretty much exactly what we pretty much just got. All right, because then we seen the market come into this level, into this level, into this level, and then we see that spike down, right? And then we immediately, well, not immediately, but then we finally start to see strong rebound, right? Demand for the dollar against the yen has picked up in these 131's price points, right? And then ever since then, we just seen the market pretty much rebound and then go ahead and continue back bullish, right? So just playing this type of price action, guys, is extremely important. Overall, we're bullish, right? That's number one. Number two, we've seen a pullback that spiked below liquidity and gave us a very strong bullish reaction. That is very, very good news if we're expecting bullishness. Now it's just a matter of finding where to get in at. Very simple, two levels. Either back down here at this area of demand. Okay, if you guys notice my sessions, guys, I do not enter no random trades. I have no interest in entering a trade at these levels where price is currently at for UJ. Why? I mean, ask yourself, right? If I have the option of buying something at a discount or buying it at a premium, what the hell should we be buying, family? Right? I bring up premium versus discounted pricing all the time because we have to start thinking like the big institutions. If I'm a big institution and I wanted to say buy USD JPY, if I wanted to buy dollar yen, right, for $1.34 or 134 point, let's just use round number, right, 135, right? If I wanted to buy UJ at 135, okay, but yet I could potentially get it cheaper at 132, 133. Why even try to buy it up here? Guys, we've seen that the demand for the dollar has picked up at 133. The demand, let me say that again. The demand for the dollar has picked up at 133. The demand for the dollar has picked up at 133. So if the demand for the dollar has picked up at 133 and this is considered discounted pricing, why would we want to buy at 135 when we could potentially get it at 133? Again, I'm here to make money, right? If I'm trying to buy something, guys, I need to buy it at a discount, right? I need to buy it when it's cheap, right? 133 is considered cheap to the traders and investors in the world. How do we know that? Look at the reaction. Right, look at the reaction. Big shout out to our newest subscribers. I appreciate y'all. Shout out to every single one of y'all that have subscribed on today's session. I know I have not been giving y'all shout outs. I apologize. I appreciate y'all though. I love you guys. Thank you guys for rocking with me. And hopefully you subscribe because you're getting some value. And if you have subscribed and if you have getting some value, right, if you have gotten just a little bit of value, go ahead and smash that like button for your boy. I definitely appreciate y'all. Right, but guys, we need to identify where the demand picked up and we need to align ourselves with that demand. So if we can see UJ come back down to 133, I like it a lot. I like it a lot, right? I like to move higher from this 133. Right? It's either going to be 133, guys, if we're being honest, right? I always like to have different scenarios. Going right back up to the highs. Not a bad risk to reward trade, 6-1. Beautiful, beautiful, beautiful. But there is also a chance for price to also still come back down to these lower levels. All right, there is that possibility. So, we also got to just keep that in consideration as well. But overall, again, I do really like this move here, guys, right? Potentially a nice reaction off of these lows to go ahead and send us higher. And again, I'm looking at these on the bigger time frame, 4-hour perspective, so you guys can get the overall gist of what I'm looking at. But yeah, two potentials here for UJ. I really like this first one though, and so that's how I'm going to be playing it overall, right? But that is my bias on UJ. All right, let's go take a look at GJ really quickly, see what GJ has been up to. Now again, I'm still very much bullish GJ. It's just more so being patient. I mean, the market can realistically go either way, but I'm technically still bullish UJ or GJ. I mean, for now. But overall, yeah, we'll just pretty much play it day by day. But what I'm looking at now, guys, I'm just looking at this market. I'm seeing we had strong impulse, correction, right? Another impulse to the highs, and ever since this impulse, we pretty much just been going sideways, right? Creating like this little sign, this little triangle, little pennant pattern. So we're eventually going to see a major breakout here for GJ, and again, we're on the daily time frame. So just keep that in mind. We will see eventually a major breakout. But for right now, just looking at what price action is doing now on the daily, I mean, we're just starting to see, guys, a lot of indecision, right? A lot of, fighting between the buyers and the sellers. In fact, because we've been at this level for a little while, this is what we like to call like equilibrium in pricing, right? This is where the buyers and the sellers both agree that pound yen is comfortable at this price point. But eventually, it's not going to be. And eventually, I do believe we're going to see this breakout to the upside and continue. I think that's what I told you guys last week as well, right? Last week, I believe I told you guys I'm not interested in this trade unless we actually go ahead and break above this 163.5, close above, break above, close above 163.5, 164. If we're able to get above 163.5, 164, then I'm extremely bullish to pound yen once again. So I want to see push up, rebound. I'm buying the hell out of this, all the way back up to the highs, right? So that's literally what I'm looking for. Again, I'm not really interested in selling pound yen. I'm really not. I'm just really interested for the buy. So that's pretty much what I'll be looking for: breakout, retest, and then continuation. Now let's go lower time frame though, right? Is there anywhere on the lower time frame that we can also look for potential entries from, right? Because yeah, we understand the breakout, the retest, entry playable, but what if the market actually decides to continue to correct first? Cool, it's no big deal. There's plenty of opportunities also on the smaller time frame. Right, so another thing that we could do. Hey, where'd my favorite bar go? I don't even know where my favorite bar just went. Oh well. Right, so another thing that we can do. Oh yeah, this is gonna be annoying. Is probably see price push. If price does push down, wait for it to push down. Right, and I'm a big fan, guys, of looking for a potential entry around these levels down here. Right, so for tonight, for GJ, if we can see price spike into this supply zone down here at around 161.5, right, that could be a potential opportunity for you to go ahead and get involved in. Okay, it's not a bad play here, guys, right? It does look pretty juicy. And then from there, we can go ahead and probably target right back up to these highs. Right, so this is a short-term play here, guys, for GJ. Overall, it doesn't look bad whatsoever. It does look pretty juicy. And again, I'm just interested in buys. This is more of an aggressive buying approach, trying to buy an entry off of just this little pullback, little correction. All right, this is a little bit more risky, a little bit more aggressive because price could just continue to go bearish. Right, but I do like the chances of that. Right, it's not a bad risk to reward neither. The more conservative play would just be wait for the major breakout, retest, and then look for continuations like that. But that's my bias for GJ. I really am interested in seeing if we can go down here around to the 161.9, 162 level. Somewhere down here in this level, guys, is going to be very juicy for us to look for some buys. I like it a lot. I like it a lot. All right, so yeah, that's what we're looking at for that. Let's go take a look at gold really quickly. Gold itself, guys, again, another fan favorite. We're just at a very interesting level for gold. I'm still very much bearish gold. I do think that we still have a good chance for this thing to flip and go lower. So that's pretty much what I want to start positioning myself, guys, for, seeing if we can actually go ahead and look for some shorts. Because we're at the level, right? We're at a major level of structure. Now all we got to do is go to lower time frame and start to really read what lower time frame is actually telling us. So let's see, we have lower time frame clearly starting to chop up. It's clearly starting to slow down. All right, clearly. So what I want to see, guys, here for gold, again, I'm looking for bearish moves here. All right, I'm not interested in nothing, no buys, personally speaking. I really don't want no buys. I'm looking for straight sells. Right, so if I'm looking for straight sells, I'm trying to identify, guys, and what you guys see me doing when I zoom in and zoom out is I'm just trying to identify key levels, right? If I want to see a sell, what key level will make the most sense for me to expect a breakthrough and then a continuation from? Well, this level right here is probably going to be the best looking one. Right, if we're able to break below this level, guys, then I'm extremely extremely bearish gold. Right? If we're able to close below the 1788, I really like the opportunity for this to go ahead and continue bearish. 100% I do. Right? So that's pretty much what I'm going to be playing for gold. Again, I don't have no interest. I don't want to buy gold. I just don't. That's just me personally. I don't. Right? But I have no problem looking for the sell if we actually go ahead and it makes sense. I like this level of structure, guys. This zone right here that I'm highlighting. The reason why I'm picking that zone is because of what has happened in the past around it, right? We have acted as support and resistance numerous times in the past. Look at all this. Look at all these times we acted as support and resistance, right? Or levels of structure. So we can either come down to here, bounce off this level and go higher, which is cool if it happens. You know, that could be a play you guys look for. But what I want to see is I want to see price break that level. And then a break of this level is going to trigger a sell opportunity for me all day long. All right, because again, I'm leaning towards the sell. I want to look for sells. And that's the only thing I'm going to be playing. Right? I'm not interested in the buy, so I'll be looking to see if I can get a sell opportunity set up for me. So it's going to be a break of the 1789 to then go ahead and continue going lower. Now let's go ahead and take a look at the indices overall. I'm also in a short position here, guys, for US 30. Let me just check my trade real quick. Yep, we're still good to go. Yeah, both of them. See, I'm only in two trades or two setups. Euro USD. You know, obviously you guys are not going to be able to see it, but Euro USD and US 30 sells. Those are the only two positions I was pretty much in all day today. Was Euro USD sells and US 30 sells, and I'm still holding. All right, I'm still holding those positions overall. And yeah, we're gonna see how that plays. You know, I'm actually doing really good on my US 30 right now in terms of dollar amount, but overall, I want to see this continue to roll over. So let's take a quick look at where we're at, guys, in terms of these indices. I know a lot of you guys had questions about that. Very simple, guys. These indices are at very interesting levels. We are at major areas of supply across the board. And I do want to see price actually go ahead and reverse, right? I do want to see this thing finally reverse and go lower. You know, depending on how the CPI data comes out tomorrow, guys, yeah, you know, if, again, I already gave you guys the scenarios, but, you know, if CPI comes out close to where we are at 9%, that's not going to do anything, right? That's not going to bring optimism. That's going to cause these indices to collapse, right? Anything close to 9% is going to cause these to potentially collapse, because inflation is still very much here, and it doesn't seem like it's going away. Anything much lower than 8.7, 8.6, right? If we get something lower than like 8.8, 8.7, 8.6, 8.5, anything lower than that, then this could easily rebound and actually start going back to the upside. But overall, I like the shorts from where we're at. I'll show you guys on all of them. Right, I like the shorting opportunities from where we're at on all of these indices. Right, we're at major levels of supply. Right, where we could start to see, you know, a lot of traders and investors start to liquidate their assets here over in the indice market as a whole. But yeah, I like where we're at for every single one. Like, they're all at major levels of supply. All right, so we're gonna see what happens. Like I said, I'm already in a position here for US 30. You know, so we'll see what happens with that. I actually ended up getting a pretty decent entry as well, which I'm excited about because the thing is going crazy. I got a really good entry. All right, but we'll see what happens with that overall, guys. But yeah, you know, I'm still very much bearish these. But obviously, depending on the data that does come out tomorrow, you know, things can easily change very quickly. Okay, so looks very good. Okay, looks very good, guys. Let's go take a look at. Again, I pretty much just looked at gold. I'm looking for the short side for gold overall. And we'll see what that one happens, guys. But overall, my favorite setups going into tonight, I'm just going to continue riding my Euro USD. I'm going to continue shorting my US 30. Because I do like I really am a fan, guys, of these NAS US 30 S&P 500 shorts. And the ones I'm going to keep on my radar, GBP USD doesn't look too bad. Right, I'm going to look at GBP, keep that one on my radar. And then another one, guys, I want to give you guys an eye on is Euro Pound. Right now, you guys know for the most part, I trade normally only USD correlated pairs. Like, that's normally what I focus on, is just straight USD pairs, because I love how volatile they are, the amount of liquidity. It's just amazing, right? But this one looks pretty good, right? Euro Pound, guys, is setting up very juicy, in my opinion. Right, I like this short right here as well. So this is another one, guys, I'm keeping my eyes on going into tonight. So just to update, I'm in shorts for Euro USD US 30, and I'm looking to short GBP USD, and I'm looking to short Euro Pound. So pretty much a lot of sells happening for me tonight. So ultimately, we'll see what really happens, guys. But I do like this opportunity right here for Euro Pound. If you guys like it, go ahead and set it up on your screen as well, and then just see what ultimately the market ends up doing. But overall, not a bad play here, guys. You know, we'll see ultimately, like I said, whatever the market decides to do. But overall, family, it's been a great week so far for me. You know, I'm up a really decent amount for now. And I expect this to continue to grow. And crazy thing is, I actually said this on social media over the past couple of days, right? Just talking about me and my journey. Because for those of you guys that are new to the stream, new to my channel, new to this entire, or at least to my sessions, right? I've been trading for 7.5 years now, right? Trading Forex for 7.5 years. I've been doing it full time for the past 4 years, right? Literally living off of Forex for the past 4 years. I was able to retire myself from my job 4 years ago through this skill set. I had a freaking crazy 2018 and 2019, right? Once I really got good at this, okay? And one thing that I really strive in is really just blessing you guys with massive information. Just overloading. Like, guys, you gotta understand, I'm giving you guys legit millions of dollars worth of information that even your favorite mentor probably doesn't even teach on, because they themselves probably do not know anything about it, right? And that's because my goal here on YouTube is to become one of the best, right? I do want to become one of the most best traders on YouTube, and it's not off the hype, it's not off of nothing, but it's based off the testimonials that I'm able to create, and you guys are all going to be a part of that. All right, but family, I do appreciate y'all. I love you guys for rocking with me tonight. We do these streams, guys, every Tuesday, Wednesday, Thursday. So I will be back on tomorrow night, same time, same place. But I will be doing a video tomorrow morning as well. All right, I will be doing a video, guys, tomorrow morning with y'all, trading CPI, right? Looking at the data and pretty much seeing what the data comes out as, and then seeing if there is any opportunities. All right, we don't force trades during data releases or after data releases, but if something is there and it just makes sense, we'll definitely go ahead and take it. All right, so family, I appreciate you guys. I love you guys. I'll see you guys tomorrow morning, 8:30 a.m. Eastern for CPI data. And yeah, I hope you guys all have a phenomenal rest of your guys' night. I appreciate y'all. I love you guys. Hopefully I was able to give you guys enough value to earn your subscription for all y'all that is watching and haven't subscribed yet. And if you haven't gotten no value yet, then make sure to continue to rock on and tune in, because I promise you, I'm going to be the educator that gives you the most value by far here on YouTube. No questions asked, guaranteed. All right, I love you guys. I appreciate y'all, family. If you want in on the boot camp, make sure to go ahead and secure your spots for the boot camp. Literally had, I think, 3 people actually secured their spots, guys, while we were on this stream. I had 3 people actually secure their spots. All right, actually secure their spots for the boot camp. So shout out to you guys. Welcome to the boot camp. I'm excited for you guys to get access to this, and I'm excited to give everybody access to it, right? All of you guys that are going to participate. So if you do want to participate, guys, we start literally on Monday. Like, this Monday coming up is the start of the boot camp. So make sure to secure your spot if you're serious about your education, if you're serious about trading, because like I said, you'll never be a part of anything like what I'm about to provide for y'all. So family, I love you guys. I appreciate y'all. Hope you guys have a phenomenal rest of your guys' night. It's your boy Abel, and I'm out of here. Let's get it.